Welcome to the weekly crypto check-in, your go-to podcast for navigating the wild world of cryptocurrencies, hosted by Robert Swarthout and Andres Sandate. Today, recorded on March the 4th, we're diving into the latest market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Good, Robert. I know it's been a couple of weeks since we had a chance to record here on the weekly crypto check-in, so it's good to see you. And I know you've been traveling, and we find ourselves already in early March. And wow, what a geopolitical backdrop and unprecedented just times we're in. I think we always seem like we have something that happens between our recordings that's eventful from a geopolitical or a political economic standpoint, and certainly today's no different. But how you been?
I've been doing good. You know, I got to enjoy a couple of weeks going skiing and just hanging out with some friends, which was awesome. Kind of good bit of recharging going on there, and kind of got back to it. And it's warm in Atlanta. When I was gone, it seemed to have warmed up. So
I think nobody's going to probably look back on January 2026 weather-wise around the country and say it was one of the most beautiful Januaries. I mean, we had our days here in Atlanta, but certainly the early part of March, if it bodes well for what the spring is, what the spring has in store for those that love the outdoors, like I think you and I do. It's hopefully going to be meaningfully nicer. I've been busy myself with a lot of baseball this time of year, both at the high school and travel level. And there hasn't been like a lot to write home about in terms of crypto asset prices, token prices. It's been a pretty tough, first quarter to,
6 months for that matter.
Well, I was going to say to pick up on, some of the dismal performance or end of 25, but I think there still is a backdrop that we've got a lot of interesting headlines to cover. There still is a lot happening in, blockchain, crypto, with respect to digital assets. So I think it's great that we're recording, because I think, those that follow the space over long periods of time know that these cycles happen. And yet there's still a lot of building happening, and the asset class is still maturing.
Yes. And we haven't recorded for a couple of weeks, but we have a lot to talk about. So we'll jump in here. It's been a pretty consistent theme for 2 or 3 months now for us, where we're talking about this market structure bill. There hasn't been a lot, and there's been a lot of time that's passed, but not as much progress. It seems like everything is held up on stablecoin yield and whether that should be paid out to holders of a stablecoin or not. Kind of as a recap, the old guard banks do not want stablecoins to be paying yield to holders, and crypto companies, Coinbases and Krakens and those kind of guys are pushing for, I would say, admittedly, a better consumer experience where you get to yield on basically your deposits. I don't understand. The banks keep saying this is bad for community banks. I think that's this cover for this is not good for business for big banks, and they keep pushing back. And the White House has even pushed back against the current state of things. I guess more specifically, Trump made a post on Truth Social saying how he, we need this to pass. Banks need to basically stop holding up the process. He's in his own words. So.
Yeah.
Hopefully soon we get some, but there's bigger things going on in the world right now, and some of this stuff can fall by the wayside.
Yeah, I did a little bit of extra reading on this because I'm like, how do we make this topic of the market structure bill relevant and interesting, given what's happening in the Middle East? Whether you call it a war or you call it a conflict, I'm not sure. Even the government doesn't feel like it can decide, but that is obviously the major headline, right? And then you've got what's going on in the economy, and then you continue down and you look at this market structure bill. What I read today was a couple of things I guess I'd share with listeners. Number one, again, I don't think either side's probably going to be particularly happy with whatever the result is of this bill. That's just legislation, and that's just the way it is. You've got special interests on both sides. But that at least you get a bill.
Right.
I think would be progress in terms of this industry. Is either side going to get exactly what they want? Likely not.
Right.
So that's one I guess one thought. Secondly is, we're now into the second month. I've been saying this now for shows.
Yep.
We get to the midterms, and there was a big election result in Texas, last night, right? That's making news. And there will likely be more of those primaries to come. I mean, if you turn on the television here in Georgia, you're seeing tons of political ads around, the governor race for the Republican primary seats. So it's just this environment is heating up. And, my fear is that we're in the second month. Hopefully we start to see the emergence of this bill and some real comments happening this second, third week, and especially into the final week of March, because I fear that if we, May, June, it's almost like that time frame where the politicians, particularly the ones that are in tight races, where there's lobbying and there's any number of issues that are going to be in play, that you could start to lose support,
Right.
not for regulation, but you just lose the momentum, and then it slips into 27. So that's another thing, just timing wise. The other thing I read, and then I'm gonna take a break and let you jump in, is you did say the White House wants negotiations to continue. You mentioned President Trump's post on Truth Social. I think that's worth people going and reading. It does sound like the Senate Banking Committee is eyeing like a mid to late March, like reconvening. So I do think that the parties are hammering through this. But I read that there were 10,000 letters sent to various senators and committee members from the banking industry / banking participants around the stablecoin issue. So there's a huge amount of pressure that's being applied on this issue. And I'd say lastly is, from what I read on one blog, the stablecoin balances are likely not going to earn interest, but crypto firms, like you mentioned, Kraken, stablecoin, are still trying to come up with other ways for customers to get that APY, that yield. And I think that the banks, from what I'm reading, are concerned that there's some kind of backdoor way in which they may not get to offer customers the yield on the surface,
right?
But there's some other way through participation or rewards or memberships or other things that gets them the yield. And I think seems like that is another reason that this is being held up, is there's some mistrust, or there's some finagling around how are we defining these terms. So vague language is not helping any of us get progress.
Correct. And a thought that I've often had about this is, like, obviously, there's two sides to this. One wants yield, one does not want to have to pay yield. I'm like, why can't we just mirror the current, deposit laws of the United States when it comes to dollars? I mean, a bank can choose not to pay to pay yield, or to pay an interest. Why can't we just do the same thing there? And if you don't want to, don't pay it and see what happens with your customers. I mean, like, why do we have to have laws saying we can or can't do this? It seems to be, I don't know, maybe I'm missing something, but it seems to be over legislated.
Well, I remember coming out of the World Economic Forum in Davos, reading an article about Brian Armstrong, who is the CEO of Coinbase, was making the rounds, and he was like persona non grata at Davos with the big bankers, right? The Jamie Dimons of the world, and the people, the guy that runs Wells Fargo, Charlie something, and basically Jamie Dimon, reportedly, again, I wasn't in the room, just was like, decide what you want to be. Do you want to be a bank, or do you want to be, an asset management firm or securities firm? Like, you can't be, hybrid. And, Armstrong's retort is like, we're creating something new that the market hasn't seen before. We're offering something that the market hasn't seen before. So don't put us in a box. So the banks have a lot more regulation than maybe people always appreciate until we have an 08, right? In terms of, they have to maintain, certain capital ratios. There's, Basel regulations. They have to have a specific amount of capital on hand relative to the deposits and the loans they're making. So I don't know. I mean, it's simplifying it, but it does feel like we're, and it's not the only issue. Like, I know there's other DeFi related issues and other things in this bill that have to get hammered out.
Right.
The regulatory framework around the CFTC and the SEC and who's the cop. But obviously, yes, the stablecoin yield is the headline issue and is the main issue. So just hopeful that we start to see some progress later this month.
Indeed. It's it's a topic that we desperately need, but we desperately need to stop talking about it. So,
well, we can desperately start talking about something else called the FedEx Corporation joining the Hedera Council. So
So many of these different crypto networks, Hedera, the token HBAR on that network, you have the XRP ledger, you have Algorand, you have a bunch of different networks, right? A lot of times they have councils or they have governing bodies, different things. So Hedera has a council. FedEx, the name that everyone recognizes there, joined the Hedera council. So why does that matter? I mean, is this supposedly a random company joining a random council? Well, at the end of the day, FedEx does plan to want to start publishing, their tracking on a public blockchain versus a private network. So in some ways, improving trust, I think, is one way you might describe that. And just to me, this is like slowly weaving crypto into the fabric of business. And at the end of the day, we're going to look back and be like, it's going to be everywhere. We're not there today, but stuff like this needs to happen for that to kind of be able to manifest itself. So pretty cool.
It is. I mean, it's the commercial utility, I think, that you've been espousing related to this whole technology for some time. I took some quotes out of the press release from the FedEx EVP and Chief Digital and Information Officer, who said the goal of this announcement is to enable commerce to operate at the speed of data rather than the speed of paper. So anybody that's ever tracked a package or sent something, right, can probably relate to that quote. The other thing I took was, I think people understand global supply chains when we have this disruption to the global supply chain. The most recent example of that would have been COVID, right? When supply chains and networks of moving goods and merchandise were completely disrupted. And he went on to say, as the supply chains become increasingly digitally native, trusted data must be shared and verified across many parties without increasing risk or centralizing control. And so obviously the technology Hedera network is built to do that. And then lastly, what you can't forget is that while most people that you probably poll have never heard of Hedera, and they probably aren't familiar with the inner workings of the software of the blockchain technology, what I think most people out there can understand is, the size of a FedEx company. It's a global company, $90 billion revenue business. Yep. The fact that they're partnering and now on the council to help drive the future of this network, along with some other major, Fortune 50 companies,
right,
is a big deal, right? So this is the interaction of the traditional, let's say, economy, a FedEx blue chip type company, with the the blockchain, crypto, digital future that I think we've been talking about on this show, and that we talk a lot about with Teton coming together. So for me, it's a good headline, and it's in the right place in terms of our update.
Yeah, and a quick few more notes on this one before we move on. So to kind of put context around this, I didn't know these numbers until I saw this announcement, but like 15 million shipments happen daily in FedEx. And I imagine that's multiple scans per shipment too. So there's a good amount of scan activity going on. They're in 220 countries. And, like, what is this use case that I think where blockchain can really help here is if something's going across borders, there's custom documents, all that can be like layered into the blockchain via smart contracts to kind of help prove and kind of, again, make it more transparent and potentially more efficient for moving between different customers.
Yeah. And I mean, I think everybody who thinks Bitcoin, when they think crypto trading, or they think crypto trading is just Bitcoin, they have to read these announcements or listen to these announcements and really understand that what this is actually enterprise blockchain adoption at global scale. right? That has nothing to do with crypto trading and,
Mhm.
the Doge and the price of Bitcoin and all the stuff that makes headlines on CNBC. You don't see these headlines on CNBC because they're not, they're not what gets clicks. They're not what gets views, right? But
Mhm.
this is enterprise blockchain adoption, which we've been talking about. And I
Yep.
think that if we were to see more progress on, the legislation in the first point, right? I think you'd see even more of this happening in asset management and capital markets and banking, like it's already happening in, you know, transportation, global supply chain, business service companies.
100%.
Yeah.
Yep. So we'll move on here. Our third topic, I found the forensics behind this incredibly fascinating. And this could not happen in a traditional finance world because all this is like behind in like a black box. So there's a Twitter, or excuse me, an X account that I follow that really is quite in the know about doing forensics on trades that happen on exchanges around the globe, and all this again is public. So there has been a $5 billion one directional selling pipeline running 24/7 for almost a year on one exchange with XRP. Okay, that was a mouthful. Let me break this down real quick. So $5 billion. Okay, a lot of money in notional value there. The pipeline, or the code, this is being run by a bot. He concluded was running for 24/7 for a year. Basically, it only took a 33-second break over the course of 1 year. All trades were posted and executed within 10 milliseconds. So it's like it's thinking. It's not just posting a bid and ask. It's literally executing something when it goes through. And this is all done in Upbits. It's a South Korean exchange. So the question is who had that much to sell? Why were they selling so continuously? It's I don't know. There wasn't an answer to that specifically as part of this thread, but it's it's cool to kind of be able to dig through and kind of understand what's going on in the market. It may not tell you directionally where the price is going, 5 minutes or a week from now, but it's cool to kind of see people curious enough to kind of dig through this kind of stuff.
Yeah, I took away a couple of things from this one. Just big numbers. 0.6% of the global population in South Korea, but 33% of the XRP trading volume on a daily basis.
Yes.
And the other thing is the Korean domestic exchanges, which have been very volatile, right, since the attacks began in Iran. I mean, more broadly than just in crypto, but there's no derivatives. It's all spot. So it's interesting that 70 to 80% of the trading volume is altcoins, and yeah, it's just a very different market structure, and kind of creates a dynamic where XRP, is one of these, is kind of this high frequency, high volume asset or instrument.
Yeah, so a couple of things, like Asia generally, they are bigger fans of the altcoins for whatever reason. But Japan and South Korea are huge fans of XRP. I don't know if it's marketing or whatever it is. It's disproportionate there, but to see that it's such a big volume, the one thing that I guess I'll leave this topic on is, so to have an account in Korea to be able to deal in Korean won is highly regulated. So it's like whoever this seller is has a reason why they need to be doing this market versus going to another market, because they were selling at potentially a 6% fill all the time. So their $5 billion could be 6% more if it wasn't for having to literally have to settle in Korean won. It's kind of interesting anecdote there. So
yeah. Do you,
anyway.
well, I was going to ask you one last question, just because I know how closely you follow and have followed XRP for years. Do you think that this type of volume or this type of retail activity what's the impact on the commercial utility use case of XRP?
I don't know if this has a tie to that.
Yeah.
Essentially, the only tie, admittedly, I think that actually maybe going on here is when going back to the question of who has enough XRP to be this kind of seller.
Yeah.
I mean, Ripple comes to mind, admittedly. Like, I know that they're constantly selling into the market. They talk about this in their quarterly things. They have billions and billions of XRP. So provides liquidity for them and also kind of like helps distribute XRP out in the market at the same time.
Yeah.
So it could be them, maybe someone else. But at the end of the day, I don't have a great answer to your question.
Yeah. Well, I mean, look, there's a lot of people that trade stocks and they're not necessarily interested in what the underlying company does and its
Correct.
commercial utility. So it wouldn't be the first and only asset, sorry. I tell people don't call me when we're doing these live shows, but they don't listen. So, but it wouldn't be the only asset that's traded where, people don't necessarily care what the underlying utility is of the business or what it does.
Yep.
So
indeed. Okay. Well, our next topic here, Meta. So Facebook plans to launch a stablecoin. This feels a little deja vu. We literally had this topic in the summer of 2020 when they were planning to launch Diem.
Yep.
And the crypto world and Congress lost their minds.
Yeah.
It was not the right place. It was not the right time. Now probably seems a little more appropriate. I think the only thing of note here is Facebook has a reach of 3 or 4 billion users.
3.2
they can really onboard a lot of people to stablecoin use very quickly.
Yeah, talk about global payments at scale, right? Between WhatsApp, Instagram, and Facebook.
Yeah.
If you're under 30, you don't use Facebook. That's what they tell me anyway. If you're over 50, it's all you use. So,
yep.
But yeah, I mean, so the question is, well, a couple thoughts, right? There's a different regulatory environment. Obviously, president and the people in the White House have made it clear this is like a pro crypto presidency or will be. And so, yes, you're right. The environment's changed. My question is, what's the rollout likely to be? I mean, it's not going to be their own stable coin likely, right? Or do we not have enough details yet to know?
I haven't seen the details of which stablecoin it is. My assumption is they would be their own because if they can get yield on it and not have to pay it, then that's a revenue stream from a lot of different people. But also, it's just how are they going to construct the stablecoin? Because originally, when they were doing Diem, it was going to be a basket of dollars, euro, and I want to say the Japanese yen. There was a third one in there, and my guess is there will not be a basket. It'll just be denominated in something. They may have multiple products, right? It could be a euro stablecoin. It could be a dollar stablecoin separate from each other. So I guess we'll get more details here. But it's interesting to kind of see this spun back up because when they did Diem, people were freaking out because it was Facebook doing it. So they separated it out, started its own thing. It became a company that ended up not going anywhere, and the assets got sold off. So I guess we're about to try this for round 2.
But there's sounds like there's a connection with Stripe, or at least there's an RFI or an RFP that's been sent to outside firms with Stripe mentioned as a potential likely candidate according to CoinDesk. And obviously they've learned probably this arm's length approach is probably better
right?
To reduce like legal and regulatory exposure and some of the political blowback that happened when they tried to launch their own. And we also, I think, have reported on this. I mean, picking up on other sources, I don't know who exactly it was, but Stripe did receive a national bank trust charter.
Yeah,
and we've got another headline about Morgan Stanley to that point. But a lot of these institutional platforms, financial fintech firms, are getting bank charters so that they can custody assets. Right? It's what you said before we started the call.
Yeah, that, and it's I think Stripe's also building a custom blockchain specifically tailored to stablecoins. I think is one thing that they're working on with, I forget who else it was, but there's a lot going on in the space, and it's cool to see the innovation. And whether something wins or loses at the end of the day, I guess time will tell. But
and to put the bow on this whole thing, we started the conversation talking about this debate around stablecoin yields. So if I'm a customer, right? I am a customer. I have an Instagram account. I have a WhatsApp account. I have a Facebook account. Although, again, I can't say my age, but I don't use it. Right? Let's just say that. How about that? But my point is if I took $10,000 and I wanted to, get stable coins, or I wanted to have stable coins to transact using, these platforms, this ties right back to this debate, right? That's happening around, could Meta offer me yield on those stable coins? right? Or for my $10,000, and the banks are saying they want to limit, right? Is that correct?
Correct.
What they could offer, how they could offer it, et cetera. And Meta, or maybe those that are in the camp of being able to offer yields, would say, wait a minute, why can't this guy's a customer? Why can't he give us the $10,000 and us give him 3%? You
Right.
know, so
the last thing I'll say, then we can move on, is they need to have a better name than Diem or Libra this time. I probably would vote for Zuckbucks. I would just like,
yeah, there you go.
Yep. Okay, so talking about Coinbase here a second ago. So Coinbase is our next topic. They have, for U.S. clients, have turned on 24/5 stock trading, which is pretty cool. This is a baby step towards everybody being able to do stock trading 24/7, 365. Not a surprising step here, but cool to kind of see it happen. I don't think it's the full stock market. My guess, if I dug a little bit deeper, it's going to say top 100.
It's about 8,000 equities and ETFs.
Okay.
So it's a pretty sizable amount of securities. And the other thing that's interesting is it's also features $1 fractional shares, which is out there on other platforms. But if you think about who's probably the typical user of Coinbase, it's probably somebody that skews a little younger.
Sure.
Probably somebody that skews not necessarily don't have assets to invest, but their balances might be different than somebody that's like your Bank of New York Mellon customer, for example. Right. Yep. And so being able to go in and, fractionally invest with as little as $1 into some of the, US listed equities and ETFs is maybe right in line with, how that customer wants to spread their bets or spread their investments.
Agreed. And I imagine this will be a topic that we see more of, and at some point we'll just stop talking about it because everyone's doing it. But this seemed a little bit newsworthy this time around. So
they can also fund their trades with dollars or stable coins. So
you keep weaving stable coins in there.
I have a question for you though. You remember when all these headlines came out years ago when Amazon's founder Jeff Bezos said he wanted to be the everything store?
Yes.
When you hear Brian Armstrong and CEO of Coinbase say he wants to be the everything exchange, what's your thought on that?
In some ways, he's saying that he wants to be a software platform that easily allows DeFi, because that's what DeFi is. It's decentralized finance.
Yeah,
you can do anything to anything. I don't think that will. I mean, we may be a long ways away if it ever happens on a regulated platform like that. But I think that world's coming. You'll be able to buy some Amazon stock here pretty soon through Coinbase with some obscure, I guess something of value that's already on the platform that doesn't necessarily have a market. And they'll create markets out of that kind of thing.
Mm-hmm.
So it's probably closer than we think, but it still feels like a long ways off. So
yeah.
Our next topic, Terra sues Jane Street. It's not a topic that I have my bingo card for this year. So what's going on here? Terra is the group that launched the Luna token. This is roughly 4 or 5 years ago. There was so the lawsuit's over. Jane Street is being alleged that they did insider trading, leading to the collapse of UST in Luna. UST was the stable coin that was backed by Luna. It wasn't backed by dollars. It was kind of a mix of assets behind it. It literally collapsed over the course of 48 hours and went to zero. The stablecoin did, and Luna price fell substantially as well. And the crypto market moved on. One of the founders of Luna or of Terra, he got arrested in South Korea. There's this holding he's in jail. There's a long story if anyone's interested. Go look it up. So why do we care about this now? Well, Jane Street is they do a lot of work with ETFs these days. Specifically the crypto ones we're talking about here. And they, on crypto Twitter, there's this it's sarcastic, but it's real joke about every 10 a.m. that the equities market's open, there's a drop in the Bitcoin and Ethereum price. Pretty, noticeable. It's not just like a small little tick. And it's been going on for a year plus at this point. Everyone's assumed it was Jane Street doing it, kind of laughed it off, but no one's ever liked it as far as I could tell. Well, at least on Twitter. I think the people that are on the winning side of that are the ETFs that need to buy more Bitcoin or Ethereum based upon their shares from the day before. They get a discount on price, rinse and repeat. Well, kind of putting this back together here. So Terra sues Jane Street for insider trading and market manipulation. The day following the lawsuit being announced, there was no 10 a.m. slam. The day after that, no 10 a.m. slam. The day after that, no 10 a.m. slam. So it seems, I don't know if it's coincidental, but it seems pretty obvious to me, at least, that Jane Street was behind this. Not that means the price goes up to infinity, but it's
well, the Bitcoin price surged 6%, right after that, and the trading patterns. And you talked a little bit about some of the forensics that can happen in markets in one of the earlier headlines with the South Korean XRP market headline. So the tools are there, right? And so the trading research experts went and looked, and for months, they were tracking this, and then it reportedly stops. Come on, there's no coincidence. Let's go. I mean, Jane Street earned $24 billion in one report. It's a multi-billion-dollar market-making operation. They're a key player when it comes to market making, particularly with ETFs, as you said, and it puts them in the spotlight. And this is the second institution I'm reading. Jump Trading was the other one that was sued for $4 billion for also alleged, market manipulation and exploitation, right?
Yep. Yeah, so, it's my understanding is Jane Street does not exactly like to be in the news, just generally.
They're very secretive.
Very secretive. And I guess to kind of put a crypto twist on this, for those that remember way back in the day, Sam Bankman-Fried of FTX fame, he came from Jane Street. That's where he learned how to trade. So it's there's always these links. Just trying to find them, whether they're interesting or not, is, I guess, to be decided. So,
well, I think the need for market structure legislation couldn't, be more
right.
I guess couldn't be more clear when you talk about this, because these are the kinds of things that happen, unfortunately, when there isn't, there aren't the consequences in the market structure and the kind of surveillance that would come with regulation.
Yep, absolutely. So our next topic, Morgan Stanley files for National Trust Bank Charter. What does this mean? Essentially, they're looking to be able to custody crypto. They have a lot of clients. A lot of clients have a lot of money with them, or a lot of value with them. So being able to custody that in crypto makes sense. And more of these, there's been crypto companies getting trust bank charters and other stuff. So the world's changing when it comes to who does what role in, I guess, the finance stack.
Well, yeah. And then if, we reported on this last year, I think it was, or maybe I don't remember when the acquisition took place, but there was a small acquisition, right, in Morgan Stanley's like blue chip Wall Street history that happened not too long ago. Remember when they acquired E-Trade?
Yes.
E-Trade being the, retail platform, and one of the ones that sort of revolutionized, people that were moving away from call your broker at,
Right.
Charles Schwab to execute your trades. And it's like, why are we doing that? Well, let's just set up an E-Trade account. Could do it ourselves. Zero commissions is one of the results, right? And people keeping more of their capital. Well, this is, according to Analytics Insight, this is, a first half objective for the firm, Morgan Stanley, to launch direct spot trading for Bitcoin, Ethereum, and other Solana and other things through E-Trade. So it's just, there's a reason why they do these acquisitions. They don't necessarily always announce them at the time because we didn't have regulation at the time of the acquisition.
Right. Like they couldn't say the word crypto, admittedly.
Right. Now you've got the retail market, right, that is do-it-yourself investors that use E-Trade, and they want to trade other assets in those platforms or through that platform. Why wouldn't they? Right. So why have the E-Trade account and go to Coinbase to do your trading? Right. Morgan Stanley's they're not dumb. So
that, we keep beating this drum episode after episode. Market structure bill needs to happen because all these things you see happening, if we had a different administration come in and have a difference of opinion on crypto, this all goes away except for the stablecoin legislation that's in place. Everything else is fair game to be changed at the whim of a executive order. So in my opinion, it needs to get done.
Yeah.
Man, I didn't think we would have this topic. Iran has links to Bitcoin. So Iran has been mining Bitcoin. I've learned. And the reason why this is of note is they effectively have infinite energy. And they have been able to mine Bitcoin without really having the cost of the power, which is the biggest cost when it comes to mining. And their average price that they're mining in Bitcoin at right now is $1,320. Again, Bitcoin is worth $73,000 today. That's quite the return on an investment for, and something that obviously also skirts the any sort of sanctions and all.
Right, international sanctions,
it's all like perfect.
Yeah, when you're able to subsidize the electricity at what reportedly by crypto ticker is saying is less than half a cent per kilowatt hour, with Bitcoin trading at around 68,000, that's a 50x spread by my math. So, it sounds like their ecosystem reached close to $8 billion last year. And the IRGC addresses accounted for over 50% of the inflows in 24 in the fourth quarter of 25, and received $3 billion. So, I mean, when you're cut off from a lot of international markets, I mean, they obviously trade, one of the biggest oil exporters and one of the biggest players in international energy markets. But yeah, when you're cut off, right, in many ways from Western economies, they're going to come up with other ways, right, to generate revenue. So it's pretty interesting.
Yeah. So kind of just some numbers to understand how, I wouldn't say important, but how impactful they are to the Bitcoin network. So 2 to 5% of global Bitcoin hash rate. So basically think of it as horsepower. So 1 in every 25 blocks was confirmed basically through the IRGC Bitcoin machines. It's kind of crazy to think, but now that obviously this war or whatever it is that's going on over there, the power's out. So you already see a drop in the hash rate of Bitcoin because those machines are offline. And, well, who knows what will happen long term, but it's, again, not a topic that I would have thought we'd be talking about.
Well, right. And, it begs a question when you have state level sanction evasion using Bitcoin to basically partially fund your economy. It kind of reveals this darker side to, this decentralized, permissionless digital economy. Ironically, at the same time that we're sitting here talking about like the need for transparency, the need for market structure, the need for this whole entire ecosystem to become part of traditional finance in a way, or at least to become accepted by more of the mainstream. It needs regulation. You have this going on. And so, it's going to be, it's going to be something to pay attention to as that conflict plays out over the coming days and weeks, and whether or not the conflict impacts, production and potentially like Bitcoin price.
Yep, indeed. Our second to last topic. So the DTCC shows that Hidden Road is live. Okay, what does this mean? So DTCC deals with, it says the Digital Trade Commodities Commission, I believe. And they deal with, Depository Trust and Clearing Corporation.
It's the plumbing of how assets are effectively tracked and accounted for.
Yes, exactly.
And reported.
So the old finance system, effectively, right?
Yeah.
So Hidden Road, this is the acquisition that Ripple did, probably almost a year ago at this point. And so now that they are live, what this really means is now that Hidden Road is live with DTCC, they can basically help make that bridge even easier between traditional finance and the crypto world. And I guess as a side note, Ripple doesn't call it Hidden Road anymore. They call it Ripple Prime, but it's the same product at the end of the day. And cool to kind of see these inroads happen. On Twitter, when this happened, David Schwartz, who is now the ex CTO of Ripple,
CTO, yeah,
he goes, probably important. He just quoted it.
Yeah, seems important.
yeah, seems important. So he's a guy who likes to be sarcastic, but also, making light of the situation, I think is kind of cool.
Well, before the acquisition by Ripple, Hidden Road was clearing $3 trillion with a T, Tango, $3 trillion yearly for more than 300 institutional clients across FX derivatives and digital assets. So, yeah.
And if I remember correctly, so they announced the acquisition, then it closed, I think 6 to 9 months later. In that period of time, the business tripled in size, in volume. So it's, and I only imagine it's going to grow crazy from there as crypto gets intertwined more and more.
Yeah.
So our last topic is Kraken gets a Fed master account. There's many crypto firms, we'll say that would love to have a Fed master account. I would have not assumed Kraken was the first one to get one. I didn't even know they were on the list to want to get one, but it was it's cool to see that the Fed actually approved this, the Kansas City Fed in particular. So
yeah, I just have to laugh because you think about the Federal Reserve Bank, and then I'm sure somebody showed up at the office and works in maybe a totally different department at the Fed and says, "What the heck is Kraken?"
Right. I mean, just the name
is Kraken, right? The name alone, it just shows that how we completely, I think, underestimate how resilient. This comment was made today by the chief market strategist, a friend and mentor of mine, David Yearwood. I'll give him a shout out. He said, check out the clip of the Goldman Sachs chief market strategist, I think, I may be getting her title wrong, had on the economy. And she talked about just how resilient the economy is in the US, right? And just sort of like they have a pretty high probability that we don't have a recession, was her view. And he said, check it out. And it was interesting because talked about just the resiliency of the US economy. And what I always find so fascinating is just how quickly, a year and a half ago, we would never have seen this headline. Like the Federal Reserve approves a master account for a company called Kraken.
Yeah.
So and now here we are. And
right.
Think about how long our show's gone today. I mean, 40 plus minutes, and we're talking not about crypto asset prices, not about volatility in Bitcoin, not about, how's your crypto token portfolio doing, but all these headlines, a lot of them have to do with just the blockchain infrastructure, the tokenization, the institutional adoption, the enterprise adoption, the political environment, and we'll get a bill done. It might be another 3 to 6 months, and maybe it takes another year, but we'll get one.
Yeah.
And I just think, you have to kind of sometimes zoom out and look at where this whole space has been and just how quickly it's changed. And that doesn't mean there will be no bumps in the road. There certainly will be, but yeah, I mean, it's pretty remarkable.
Yeah. So Kraken filed this application initially back in October of 2020. So for 5.5 years. So the person whoever been working on this doesn't feel like it happened very quickly. I guarantee you.
No, you never do. But that's the nature of the grind, right?
Yeah, absolutely. And I think something important to point out here is this is not a full master account with the Fed. This is what they're calling a skinny master account. It allows them to hold reserves and settle in central bank money, so dollars, but they're not allowed to lend. But I can't imagine that they were exactly wanting to do the lend part anyway. So they have access to the Fed's discount window, and or can operate. Oh no, it cannot. It doesn't have access to the Fed's access window, and it cannot act as a commercial bank. So
yeah,
I don't think that was their ambition, at least initially. So
right. I was going to say, if they got that much, man, I think you and I need to go set up an operation and go apply, because the Fed's definitely open for business. But no, I mean, look, I always like to try to find a way to leave things on an upbeat tone. I mean, anybody that's in crypto right now that owns assets is probably like, man, this is just, we're in the middle of the winter. But when you do, it may not feel good, but sometimes you have to be able to take that and perspective and sort of zoom way out or up or whatever direction you need to kind of get perspective, there's a lot of positive stuff happening despite what's going on with the crypto asset prices.
And this is the things that, in my opinion, will eventually lead to the higher prices. But you have to get the dirty work done first. So
yeah, you got to get there and kind of live to the other side of it.
Yeah. Well, I think that's a wrap for this episode of the Weekly Crypto Check-In. Keep updated with the latest crypto insights by searching Teton Crypto Capital or the Weekly Crypto Check-In in your favorite podcast player. Leave us a review to share your thoughts, or find us on LinkedIn and like our page. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.